Hey everyone, welcome back to Corporate Decoder. Today, KKR FS Income Trust just filed an 8K announcing a dividend, and I'm seeing a key detail about how shareholders will be paid. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is giving shareholders a choice on how they receive their dividend payments, and that could have real implications for their long-term holdings. So, KKR FS Income Trust, a company that deals in securities that generate income for investors, has announced a dividend. This is a pretty standard filing for them, but the devil is always in the details, and here the detail is in how you get paid. The company stated that on the 9th of July, their board of trustees declared a monthly dividend. This dividend is set at $0.225 per common share. The payment is expected around the 27th of August, and you had to be a shareholder by the end of July to be eligible to receive it. This part is pretty routine stuff for a company that pays regular dividends. Now, here is where it gets interesting. They are offering shareholders two ways to get this dividend money. You can take it as cold hard cash, which is what most people probably expect, or you can choose to reinvest that dividend back into the company, meaning you get more shares of KKR FS Income Trust instead of cash. This is done through what they call a distribution reinvestment plan, or DRIP for short. Why does this matter? Well, if you believe in the company and its future prospects, reinvesting those dividends can be a powerful way to grow your stake over time. It is like dollar cost averaging, but instead of you manually buying shares, the company does it for you with your dividend money. It can also be tax efficient in some situations, as you might not pay taxes on dividends until you actually sell the shares. However, if you need the cash for living expenses, or if you are less confident about the company's long-term performance, taking the cash is the way to go. It gives you flexibility for a company like KKR FS Income Trust, which focuses on income generation. Offering this reinvestment option is crucial for attracting and retaining investors who want steady income streams that can also be compounded. Then we have a standard section detailing exhibits filed with the report. For this filing, the only exhibit listed is Exhibit 104, which is the cover page interactive data file. This essentially means the document itself is in a format that computers can easily read and process, which is how regulatory bodies like the CC manage these filings efficiently. Finally, the report is signed off by Stephen Sifford, who holds the title of General Counsel and Secretary for KKR FS Income Trust. This shows that the filing has been officially authorized by a senior member of the company's legal team. Looking at this filing, the main story is the shareholder choice regarding dividend payments. For investors in KKR FS Income Trust, understanding whether to take cash or reinvest is key depending on your personal financial goals and your outlook for the company. Taking the cash provides immediate liquidity, while reinvesting can amplify long-term gains if the company performs well. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord in the description.